Good morning, everyone. Welcome to the Modern Market, where every day we discuss all the things to do with the markets. We will be talking crypto, we'll be talking stocks, we'll be talking even some NFTs and metals. We'll be discussing all the things. It's a bit of a red day, though, so which is not ideal, but we'll get into it. We'll talk stocks losing $1 trillion in market cap and Bitcoin dropping as low as 65K today. We'll talk Aave Labs revealing a proposal to send 100% of protocol revenue to the DAO, which on the face of it sounded good to people, but there's been some pushback. The DAO must fund it with $25 million across the year. Brett will break down the details of that proposal today. And finally, Netherlands announces bill to tax unrealized gains at 36%. We'll talk about some of those details as well today to try to get on top of what is going on in the world and how we're supposed to deal with, well, build with and manage whatever wealth we've cobbled together in this challenging market in 2026. We've also got the latest on price action as usual and some general market thoughts, which we'll get into in a bit. I've got Legendary and Brett in the co-host seats with me today. We're ready to get into it. But just a reminder, friends, before we do, nothing that we say here is financial advice. This market is very, very risky. We unfortunately don't know anything for sure. So please always proceed with caution and always exercise your own judgment. With that out of the way, Brett, it's Friday. It's the 13th of February. How are you doing today? How are you feeling?
Things are good. Hearing those headlines for the first time, that unrealized tax is going to be that's going to be a big one to discuss. That's insane. But on my side, in my small little crypto world, things are good. I've honestly been cooking pretty hard on my side project. I'm excited to almost have that ready. Getting ready to have that out, and man, this AI is crazy powerful. It's like I was actually talking to someone yesterday about it, and I was like, I had my entire previous team, which was made up of me, a front end guy, a back end guy, and then someone who did smart contracts. Like, it's 4 of us. It's like, had I had this same idea and tried to recruit them, we probably could have whipped it up in a couple weeks, like pretty good. Man, I did it as a side hustle over the course of 7 days. Crazy. But it's fun. It's empowering. Ready to bring it to market. It's gonna be a good time. How was you guys had a call with Namik yesterday? I haven't had a chance to read yet or listen yet. Good.
Yeah, it was good. Good to chat. Learn some interesting things about the direction for Mega. One thing that stood out to me was I kind of picked up on one of the messages he was sharing, and the thing that I found interesting about the team, which I thought was interesting to bring to light, was like the international nature of the team, which means you're kind of uniquely positioned. I know you're super fast as a chain, but the thing I'm interested in, maybe from my perspective, is like the unique FX things that you might bring to the table because you have people from Turkey, or you have connections to Turkey, or because you're uniquely international in a way that maybe the more Western chains are not. So a few interesting things he revealed on that side. So that's what I found interesting. Ledge, curious for your thoughts before you kind of just update us on what's going on your side.
Yeah, on the app side, I fully agree with. On the speed side, obviously my mind can't stop thinking about things that we could do on the agentic side with that. And agentic wallet similar to what Coinbase has, but with the speed that you guys have, you actually should be able to do some sensible market making, arbitraging, to be pretty good at that and be pretty competitive at that. Obviously, it's not really shareable if like a bunch of bots are racing to fill the same arbitrage gap or whatever. But I think there's even more things that you can do from agentic side with this execution speed, because the execution is probably way, way, way faster than what bots would do if they have to call LLMs, if they go through other type of queries to find conditions to operate under. That could be way faster. And I'm still trying to wrap my mind around that, because I've been playing around with some of the things, and I actually have an agent which is thinking on what to do with Mega ETH and what we can try to come up with. And I probably should be able to show something on that next week. But yeah, it's this thing that I said about Mega ETH, I feel like half a year ago. I don't know if I think I posted it. I didn't say it on the show. that the thing that impressed me and that I did not expect, I don't know if you expected this unlock, Brad, is the creativity unlock for builders with that real-time chain. Like obviously, Euphoria comes to mind as an example because, well, I am working with them, the advisory side, but still, they've been building that way longer than I have been working with them, and I think that was an unlock due to the capabilities of Mega's like unique speedy architecture, for a lack of a better trivial word. And I wonder if that same like creativity boost can also happen on the agentic side, and I think it can happen.
Yeah, it requires some work on my side. Like my like whenever I mention like I wanted to make it AI forward, there's a lot of like boring shit, frankly, that you have to do to make it like super easy compatible. Right? Like you want to have an MCP server, you want to make sure it's X402 compatible. We just got 8004 registered on the chain on Monday, whenever it launched. It's like just working to get a lot of the gross bones in place. And like even my AI developer kit, I've had a lot of people go up to me like, bro, it's been so easy to build and develop on Mega because I got that kit. Like sick, because that's what I built this entire project on. Like it's insane. But yeah,
exciting stuff. So yeah, good conversation yesterday. We've got two excellent conversations lined up for Monday and Tuesday next week as well, and hopefully some more that we're cooking up as well. We're going to be continuing to try to have the best conversations in the space with the people who are not going anywhere, who are going to continue building on the forefront of crypto and real world assets and pushing the barriers of tech forward. So, we're going to keep bringing those conversations to you on a routine basis. Looking forward to that. So let's get into the main stuff today. But just before we do, I want to shout out our sponsor, our Friday sponsor. As usual, we're excited to be sponsored by Yeat. The crypto casino has done more than $1 billion in less than a year, founded by trusted names like Mando, KBM, and pro poker player Ben Lam. Just a reminder to participate with only what you're comfortable with, and to help there, we are giving out up to $500 each week. Well, we're giving exactly $500 each week to a player that is active under the Modern Market affiliate link, which is going to be in the Twitter comments. It will also be in the YouTube when we're up there. And so check it out. They've a number of crypto themed games, and their sportsbook just launched. So stay tuned for the giveaway. At the end of today's show, we'll be giving away $500 at the end of today's show. So looking forward to that. Let's get into the main headlines as usual, starting with the price action. We have, unfortunately, Bitcoin down 1% to 66.8K. We've got ETH down 1% to 1,900. XRP is down 2% to $1.37. BNB is down 2% to 600. Sol is down 2% to $79. And we have Hype down 1% to $30 as well. Getting into the meme coin side of things, we've got Doge flat at around 9 cents. Doesn't look great there, guys. Kind of given up a lot of the gains. Pepe is down 1%. Pump is still Pump. People do not believe in Pump. Flat at 1.9 bill. Bonk's down 2%. Pippin's down 2%. Up still 190% on the week. We do not know what's going on with Pippin, but it is green on the week, if not down a touch today. And okay, the rest of the stuff looks a little bit red. That's would be fair-ish to say on the meme coin side. However, more importantly, the headlines we'll be talking about today are the following. We're going to be talking about stock losing $1 trillion in market cap, and Bitcoin drops as low as 65K. That must have been because I said I was short the market yesterday or the day before, and I said I was going to log off and not look at it even when I was down and the market went against me. So I think I might still be down even though it's gone down, but I'm holding my shorts. So that's what I'm doing on XYZ, on trade XYZ. So Aave Labs revealed proposal to send 100% of protocol revenue to DAO, but the DAO must fund it with $25 million across the year. Brad's going to break those details down about the biggest crypto lending platform in the industry. Curious to hear those. And then finally, Netherlands announces the bill to tax unrealized gains at 36%. Pretty big news, guys. We've got to figure out what we're doing. I don't think Netherlands are going to be the only people passing these types of laws. So let's think about it out loud today. Some other notable news. Bearer is down 17% after a big move yesterday. Layer Zero had a positive news and outflow, and the price went up, and then it went back down 13% the day right after. A lot of good news is getting sold aggressively into at the moment. So it's a tough market, as we know. Tough market. Market Roundup, CFTC creates a new Innovations Advisory Committee, including leaders from crypto and prediction markets. An interesting body that got created. There's a lot of familiar names from the industry that are now going to serve on this board of the CFTC. So I think that is very interesting to note. Worth checking out the list in a bit more detail. Brian Armstrong revealed to have sold more than $500 million of coin stock last year. The dev started selling. Hope you were not buying as the dev was selling on top of your head. Google Cloud announced as partner with Layer Zero to explore how to enable AI agent micropayments. Talked about AI agent payments before. It's going to be a big focus for Layer Zero as well, I think. So I'm keeping an eye on that too. Record Ecosystem announces $3.2 million raise from Sony, the Sony Innovation Fund, to build on-chain entertainment on the Sony chain. I'm curious about that. I'm always curious about how media is adapting in this new blockchain world, what they're going to do. Solana announces a graveyard hackathon. Talked about AI hackathons, a graveyard hackathon to resurrect dead categories. I don't know if this is a joke. It seems to be some real money behind it, although not a lot. Art, NFTs, on-chain, social, and gaming. all sectors that are determined to be dead. I don't know if it's good or bad. Like, they're giving money, but they're also proclaiming that those sectors are dead. So I don't know if anyone's even building in them if they're considered to be dead. South Korean police seize Bitcoin held in the cold wallet since 2021. Sounds a bit suspicious to me. A bit too convenient to just lose all of this seized Bitcoin. Anthropic, creators of Claude Code, raised to $30 billion, $380 billion valuation. They've raised a lot of money over the last 12 months. But there's a hell of a lot of appetite for Anthropic at the moment, and that is showing that. But that's the roundup, guys, for today, to get us up to speed with everything that we need to know from around the space in the last 24 hours. Before we get to the main stuff today, Brad, you look ready to go. What is catching your attention here in the news before we get to the main stuff?
I got two that will dovetail into one that's off-piste. One is the Google Layer Zero one, and I was recalling we brought that up yesterday because they announced their blockchain Zero, and we actually had Yilong, who's our founder, like, review everything that they debuted, and was like, okay, like, bro, what the fuck are these numbers? Like what? Like, they're saying a gajillion like TPS. Like, what's going on here? And he's like, yeah, man, there's a lot of fucky stuff going on with this. And like, even the example that they gave of like, oh, we had 500,000 swaps for ERC20 whatever's on this hardware doing whatever. He's like, yeah, man, like, if you do the exact same simulations on that, we actually did 700,000 swaps on a PC that was like a third of what they actually did 4 years ago. He's like, so it's like it's impressive, but the numbers are a lot of marketing numbers because like they're not real world numbers. So like, that was interesting. The other is the graveyard thing, actually something that I think was a good initiative. Because man, it's you try to think about the pace of technical innovation in our space, and things have changed, dude. So like, we even as a team have looked back periodically at like the 2017 ICO wave, right? Because people were so much more inspired there, or like, what is possible. They tried things in 2017 era technology, and they go, dude, there's no chance this can actually happen. You know, we're doing 5 TPS on Ethereum, and that was the most advanced blockchain in the world. So we've actually gone back into the crypts and tried to pull out some of the stuff ourselves and look for ideas that are now, you know what, maybe in the new paradigm, current paradigm, maybe possible, right? Like, you might actually be able to achieve some of these things because the tech is actually caught up. So I think that's interesting. And one of those categories in there is gaming. And this is where I'm going to plug what I was telling you guys before the show. Apparently, for the audience, there's like Hunter Tales is a new gaming thing that's kind of popping off right now during a raise phase. I bought a Hunter. It's on Mega ETH. It's a team that was from DeFi Kingdoms and a few other places, but yeah, it's popping off. So it's a bit of a surprise for us. I talked to the team, and like, we were, I mean, we knew they were coming to market, but I was surprised at the reception because it's apparently got into some pudgy penguin circles and some gaming guilds, and they're excited about it. So yeah.
Interesting. I know what you mean about the pace of innovation. You can be very sincerely building towards something and then realize that the thing that you're building towards has just completely
Early system
changed,
is
or
wrong, right?
the landscape is not there anymore. And yeah, if you're a chain like Solana, who is the chain who've had this initiative, I guess maybe you're thinking about it from the extent of, okay, there's all these different industries building on top of our chain. Not all of those sectors are profitable, but maybe we need to subsidize a little bit so these people don't get too disheartened. It's kind of like a city, and you're thinking, okay, we've got these different hubs. You've got maybe a corporate hub, you've got an artistic hub, you've got a this hub, you've got a that hub, and maybe not all of them are going to do well at the same time, or a new one spans up, and you don't want them to leave. You don't want them to leave crypto necessarily, or leave Solana necessarily. So, look, why don't we give you, or create this short form subsidy for a period of time? Maybe that can keep you
We'll call it a
engaged,
stimulus.
a little stimulus, or the promise of a stimulus if you win the bounty. Just maybe keeps the spirits up a little bit for the people who are building, and maybe even buy some time to figure out the next pivot that they need to, rather than things just cratering and closing the door on what seemed to be a potentially interesting thing, and then it not working out anymore. So I know what you mean there. I know what you mean there. I'm not opposed to. I think the numbers here is what's actually important, because if you go through the numbers are very reasonable. Sometimes you see these initiatives from chains, and it's crazy amounts of money. I remember at some point in the bull market, and obviously this happens in the bull market, like Arbitrum having a gaming arm
It was like
that was gonna
$500,000 or whatever it was. Yeah.
yeah, just insane numbers to throw at people, and then that probably attracts the wrong people. Where here it's very modest. It's like NFTs, 2.5K from Drip House to revive NFT infrastructure and experiences. On-chain social, 5K from Use Tapestry to rebuild social on-chain. So it's very modest, responsible amounts of money, I would think, in order to try to do this. So I think that is relevant as well. So interesting point. Ledge, coming to you here, what's on your mind? What's catching your attention? Is there anything that you are focused on?
Yeah, a couple thoughts, a couple quick comments. Arbitrum not only had the Arbitrum Gaming Ventures, I think it was called, but it also had the cultural fund with millions and millions in it to pump meme coins, if we remember that. So
Arbitrum had that. I remember AVAX had that.
Avax
Arbitrum
had
it
one
too.
as well.
Avex had one, but Arbitrum also had the cultural fund.
Jesus.
Both of them had. So because I think Avex started and Arbitrum then copied, if I remember correctly. So these numbers, as I say, are way more sensible, and it kind of goes back to conversation which we had on the show yesterday, where I was like kind of talking about this like agentic engineering, vibe coding, money making opportunity. And I feel like if you look at these bounties and you see, I don't know, DeSci has a 1K bounty or ticketing has a 5K bounty, this is not going to be ultra competitive. It's going to be a completely different type of competition than trying to participate in Anthropic's official hackathon, which is running next week, where you can win like 100K in Anthropic API credits and present in front of the team in San Francisco and whatever. So this is a completely different entry level, like cool to play around with. And realistically, you can submit in more than one category. I haven't read the rules, but I would assume you can, because that is how most of these agentic hackathons are designed. So that's cool to see. The other thing that I want to touch on is the Anthropic race, kind of connecting to that. The interesting part here for me is, well, first of all, both Microsoft and Nvidia had committed 15 bill last year to invest in future rounds, and they called, or part of this commitment was called. Apart from that, we also have Sequoia Founders Fund, Green Oaks, and the Singapore fund Temasek participating for the first time. And what is really interesting and rather unusual for Silicon Valley is that both Anthropic and OpenAI are now sharing a number of big backers. That includes Sequoia Founders Fund, NVIDIA, and Microsoft, who are invested in both of them. That is not something you typically would have seen to that extent. And it was remarkable enough for the Financial Times to also make an article on that. And the last thought that I had, and then I'm done with my soliloquy here, is actually on the Espresso down 25% on launch. I think a lot of people had an airdrop on that. Basically, a lot of wallets were eligible. Do you happen to know, can we claim that? Is that open? Is that happening later?
I guess so. I don't know 100%.
Gotcha. So I'll need to.
Didn't they do holder metric too? I saw some comments around like they were granting airdrop levels based on prior behaviors of claiming wallet.
Interesting.
So like if you were someone that sells instantly, you got less allocation.
Yeah, I think they did something like that. I think that's been a persistent thing that people are now trying to figure out. I think airdrops, and actually DeFi Ignis had an interesting post about how one of the big reasons, and this is an interesting analysis for people thinking on how to continue to compound their portfolios. One of the huge ways to do that over the last how many years has it been now? 5 years. Yeah, 4 or 5 years. And before that has been airdrops, right? I think Uniswap came in 2020 or 2021 or something like that. That I missed that one because that was just before me. And then after, you kind of figured out, oh, this is a way that people are distributing their tokens, a way to, if you support the really good protocols, you get a slice of their token and you'll participate in future upside. But that's going away. And so I think we've had 4 or 5 years of, not only crypto being the industry where you have this asymmetric upside, it's the hottest new technology of the future. But you also simultaneously had that, okay, well, just for being here and just for participating in the liquid market and using things, you then also get these constant stimulus packages in the form of tokens where that keeps compounding what you make. And I've written airdrop threads before on how much that's added up to. It was very, very significant for me over the last couple of years. And I think DeFi Ignis, very prominent poster, information provider on the timeline as well, was saying the same thing. And I guess one of the issues here for people who are now thinking, well, whether you were here before or whether you're newer here, what do you do in the absence of those? Like, for example, Mega has chosen not to do an airdrop. You kind of aligned community in a different way. Hopefully their participation means they make some or a ton of money. Obviously now the delta between the ICO price, at least I know some people are in before, the delta between the ICO price and where it's trading on pre-markets, at least at the moment, has like really compressed. And so, the fantasy world, or maybe where we existed before, of using a protocol a few times or providing liquidity for 3-4 months and then getting a chunk of cash is not there. I think that is fair to say. Ledge, I know you've been, you are probably the person that talked to me and explained the whole process of airdrops for how they worked the most back in 2021. What do you think that's fair to say? Is that an opportunity that the door is closed now?
I think so. Yeah. And maybe it's not the farmability of that, I would say, is closed, because obviously projects after the first surprising airdrops, like Sushi was before Uniswap, and then Uniswap copied it and made it like super popular. And then we've seen a wave with Arbitrum then being the first to have more sophisticated criteria and like 8 different kinds of tiers and volume farming, and that did inspire a bunch of other chains to be farmed, this whole airdrop farmer category. And even we did the 32 Dreams thing back then to have the airdrop guides out before we started doing the show with the modern market. And it got more and more sophisticated. People started to automate that, and it got to a point where the just being there game is not really the airdrop game anymore. People tried different approaches. And obviously, you spoke to Mega, and I think that, well, Brad, correct me if I'm wrong, but then for the on-chain bounty program, probably not the correct term that I'm using, only people who participated in the pre-sale, no matter if they had allocations or not, will be eligible for that, I think was the status on that. So if that is correct, you had to have some sort of pre-exposure and financial interest or financial potential commitment to then be able to be rewarded for your on-chain activity. So it's getting more and more like stricter, but also like really trying to find this alignment, and like the random farming and just waking up to, I don't know, a couple 10,000 in your wallet. That period is over, especially now as we're entering this agentic era where your agents could farm. I mean, I could spin up 1,000 agents farming all who's in the world, and why would I get an airdrop for that?
I think it has to be right as well, though. Like it's not. The data got so skewed because there was so much either fake TVL or fake transactions that there's just not a way that that game can continue. That can't continue in the real world for so much value to be attributed to fake TVL and fake transactions. Like in the end, the market will figure this stuff out always, and it has figured that stuff out. And so now that is no longer on the table. So go on.
I think fake is a strong word there, but it was rented for sure.
Rented is fair.
Because like, I mean, that's the whole, like one of the code is law principle kind of things. Is like, if it's a paying customer, I don't care if it's a bot or a person or whatever, like, bro, do not care. But definitely mercenary, definitely temporary, but that's frankly everything, right? Like all TVL is rented. It just depends on how sticky you can make it, right? Sure. Solana's TVL is rented if they can't continue to produce like a thriving economic zone. It'll be the case for everyone. I'll say I actually counter, like I don't think it's dead, but it's definitely going to be narrowed. And I won't say it's not dead because some teams will suck. There's going to be shitty teams that roll through that don't know what they're doing and or do not get with the rest of the ecosystem, and they're just going to throw money around. We saw it with 0G with the Kaido stuff, right? Raised a shit ton of money, came in and started just money printing it, money cannoning it. I don't even know what the thing is. The little like dollar bill shoot gun thing. They're just doing that, a bazooka for all the KOLs, right? Oh, dude, come vote and Kato, do this thing. And we know that's just what they do, right? So like that's going to continue to happen. But yes, the opportunities will narrow for sure. And like it or not, it's still something of a requirement for young ecosystems. That's why we're doing our rewards campaign that Legendary called out, right? Like in a competitive environment, because a lot of ecosystems require bootstrapping and require being better than the thing next to them, which has had years and years and years of buildup and development and interlocking stuff, man, you're probably gonna have to emit some tokens to do that kind of stuff. And it is a necessary cost, even for someone like us that was very, very deliberate on how we give away what we consider something that we want to own. So it'll continue to happen. You just gotta pick your spots.
I agree. I think that makes sense. The thing, I guess, maybe just big picture, something I've noticed from my own behavior is that no longer do I think, because I like to be lazy, right? I'm busy doing other things. I don't want to have to press buttons all the time. I want to be able to park capital somewhere. I would rather be capital, well, in respect to farming, do it in a capital rich way and go in with a big number and then therefore get to be lazy rather than invest loads of time. And, you know, that's I think maybe the classic way where people think, okay, well, capital just keeps compounding then because the people who have the most continue to compound the most. But the thing is, those opportunities aren't there anymore. Like I've noticed that myself. The only interesting thing I've noticed recently is when you find something, and I'll give a specific example here, like Felix on Hyperliquid, where it was originally, you need to think about the trajectory of some of these protocols that you're working in. The dump it in a lending program and earn 4% and think that you know your however many $1,000 is going to get you a huge airdrop. It's too lazy. I don't think the market rewards that now. If it's just an Aave fork or a Morpho fork, like if you're just forking Aave, that protocol is not going to be worth a lot. And we're going to see this in very short order. I think Hyperlend is coming to market very, very soon. It's a good product. It works. It does everything as it's supposed to be, but I think it's just an Aave fork. It's going to come out on Hyperliquid soon. It's not going to have a big valuation because it's just forking Aave and that's it. However, something like Felix started as a lending protocol, had a few interesting mechanics, got a vanilla lending and they've got some other lending, but then on top of that, then they're doing HIP3. They're doing HIP3. They are bringing certain assets to market. So now they're participating in the transaction, which I think is where the value is. And if you're going to be thinking about where to allocate your capital, participate, if you want to not only try to make some on the transactions themselves, but also participate in the value of the future protocol. The future protocol values, I think, will be the ones that are owning the transactions. You want to be a part of the transaction. I always think about this from my perspective. We own the media, which is nice, but I also want to own the transaction. And so I'm trying to participate on Trade XYZ, even though I do not know if Unit are going to do a token. And in fact, probably hear the opposite at the moment, although who knows? They're a very private team, I think. Maybe, if they do, I want to participate there because they've got colossal market share of HIP3 on Hyperliquid. But then you've also got Felix, you've also got Dream Cash, you've also got Ostium outside of the HIP3 market that are doing bringing kind of unique transactions to market. So I think that's where we're going, guys. We're going towards a place where a lot of assets are going to come on chain. A lot of more exotic, unique things are going to come on chain. And you probably want to play there because at least there will be transactions and there will be real value being kind of transacted. And I think that's where the value accrues in the kind of short to medium term. And those will be the valuable protocols is my estimate. That's outside of maybe a valuable game here and there or some great IP. I'm still very, very bullish on IP, by the way. I think the value of IP is the sky, depending on how you build it out and how people go about that. But right, any final comments there from the guys? Do you agree with me, disagree? I have a very specific thesis there, I think, where I'm kind of very narrowly going after stuff. But what do you think?
I tend to agree with the IP part. I think that in a world where it's becoming more and more easy, and that will also be part of the things that I want to talk about in the first headline, to build out whatever product it is. Look at a company like Aave Labs, which is down 18% or so on the day, where everyone can use their own AI assistant or whatever to build whatever app they want to have. You will have to have an IP connection to it for stuff to be able to sustain in a world where it's going to be so easy to build things, and or your products have to be so unique that they can actually be sticky apps and then others will use them because it's still too complex to rebuild it yourself. Like nobody's going to go out there and be like, oh, I'm just going to build my own Mac OS tomorrow by coding that out of Cloud Opus 4.6. No, you're still going to use your Mac, you're still going to use your Windows, you're still going to use your Linux, whatever that is. But all of these things already have like a great IP and branding. So massive value in the IP side of things, especially once we're going to get closer to like customized content. Like why shouldn't I be able in the future to watch an episode of The Simpsons if I want to watch South Park or whatever that is local to me in Vienna with stuff that's happening here, maybe incorporates some of my friends, maybe you guys are some of these Simpsons characters, and it's an IP that I like. And you are in there, so then the value of the IP becomes even more important.
Okay, yeah, I'm very bullish on that. And okay, and maybe one other thing, IRL stuff. And again, I think, guys, we're in a kind of market you got to think outside the box and think and rethink some of your theses. This is not just about trying to. The show is not just going to be about trying to pick coins, pick protocols. It's not really about that. I'm trying to form bigger theses about how the world is evolving, how different regions are evolving. I'm also incredibly bullish IRL. Like if I actually reflect on a couple of my investments this year, two of the things I've been most excited about before they came to market and after, one was Origin Cap Games, where I saw, the card game with someone, Spencer, who knew that world, knew how to execute. Okay, that is cool. Pair that with Web3 IP. I thought that was interesting. Rect is obviously doing an amazing job taking this physical can of sparkling water and putting it in places and pairing that with the Web3 virality. I think this combination between Web3 virality and energy and money and IRL something, IRL connection, IRL events, the connecting part is actually very, very nice. If you're solo one and without the other, it's not as exciting to me, but I'm seeing more people bring the two things together. And there's some other stuff that we've invested in, which maybe is coming to market soon. I'm very excited about to talk about soon. And I think I think this nexus is a really, really interesting place to be. So I just wanted to share that because I know we're kind of terminally online, but don't underestimate the value of IRL in a world where AI is going crazy and people are just talking to bots all day. It might feel quite nice every now and again to get around people. And I think the value of that is actually going to skyrocket if you can get the right people in the same room. So that's some other thoughts on the investment side. Let's get into the main headlines today. We've got some important stuff to get into. Ledge, stock market is not looking good, or it lost a little bit yesterday. What are we looking at here? What do we need to know? What are your thoughts?
Yeah, enough of the bullish news. Let's talk about the stock market. 1 trillion being wiped out as the S&P 500 was down 1.6% on the day, making it the second worst day since Thanksgiving. What has happened there is, and I'm gonna get Finvis up because I feel like this is gonna be helpful. Is that we're seeing Apple down 5%, which is a ton for a company of that size. But also we're seeing the whole semiconductor sector, even with Nvidia being down 1.5%, other players being down 3%. And what is also happening is that it feels like investors are now looking strongly at companies that are threatened by this insane AI advancement that we've seen, especially in February. And as I mentioned, a company like Apple reported stronger profit last quarter, nonetheless down 18% on the day on that. And that is the case for many software companies. There's pressure from AI being able to undercut their business is really crashing these stocks. Even stuff like Cisco Systems is down 11% on the day, despite analysts like predicting higher profit expectations for the next quarters. So that is something that we're seeing accelerating a bit. The AI worries hitting the stock market particularly hard. At the same time, as you said, when tech is moving down to this extent, obviously crypto will also be punished. So BTC is down on the day as well. And we've seen some more volatility with gold. Yesterday or the whole week, we've been reporting that gold had a good time to hold strongly above 5K. Did dump to 4.9K. It's now up again to $4,970, up 1% on the day, technically after a bit more of a correction. So to me, that reads that this AI fear that's playing out in different industries at the moment is making investors more anxious, is like increasing the volatility in the market, is obviously has crypto reacting as well, but adds, especially as gold and other things, silver have been trading so high, adds more volatility to these markets as well.
Good stuff. Interesting points. I'm very persuaded by this idea I heard from Quinn Thompson on the Forward Guidance podcast, which I really like in general on a weekly basis. I think they think through some things and present it in a quite nice way. The idea is that the Trump admin last year said that they were very public about their Main Street, Wall Street versus Main Street. It's Main Street's time. The market started crashing really aggressively, almost on their words about their intentions of doing stuff. And then they had to fix things, and then they kind of backtracked, and then the market just kept going up. The thesis is, or one of the ideas shared now, is that they have to do something because of the midterms. They can't just let the stock market keep ripping this year specifically when polling for Trump is so bad. And I mean, I don't want to dive into every single aspect of US domestic issues at the moment because there's a hell of a lot going on, whether it's the ICE stuff or whether it's the Epstein stuff, and all of these factors kind of feeding into each other. But if you look at some of these stocks, they're really down now, some of these top stocks. And the point is that they're going to do it, but they're not going to be as vocal as they were last time. This was the idea shared. And that is what I'm seeing in the charts. Like if you look at Palantir, Ledge, if you want to just pull up Palantir. And by the way, if you wanted a top signal for Palantir, It's gonna. I'm sure you guys saw those interviews going around at the moment when the founder Alex Karp was brandishing a sword around when that what's her name, Molly, who does really nice interviews, went to the office. That I think was probably the top. That is the top. The founder was brandishing a sword around a 20-something-year-old interviewer, and you didn't short. You didn't short. So I don't know if we can get that image up as well. It's pretty hilarious. But the point is, Palantir on 6-month chart. I mean, the high was at around 210. It's down to 130 now. It's down 30% in the past 6 months, pushing 40%, and that's a pretty aggressive pullback. Like I know that maybe the S&P is kind of adjusted in different ways, but some of these bigger stocks have really pulled back. But I think the noise around it, and to be fair, there's a lot of other stuff going on. There's a lot of other stuff going on that's capturing people's attention, whether it's the Epstein stuff, whether it's the ICE stuff. But there's a lot less noise being made about this as per last time. So I'm kind of persuaded that this might continue here. I've said that I'm short the market from maybe last week or something like that, because I feel like they're running out of steam here. In the same way, and I actually scrolled back through my timeline the other day. I was looking for the video I made when I was short ETH to figure out what price I was at. And the video was me explaining my thesis of being short ETH at 4.5K. And the thinking was then something like, I just like the risk reward, where it's like, look, if you're going to liquidate me and we go crashing through all-time highs again, then fine. But we seem to be topping out. We seemed like there wasn't many more buyers left of crypto. And I'm kind of in that same spot with the S&P here. It's like, who is not allocated to NVIDIA, for example, that should be allocated to NVIDIA? Who still needs to buy NVIDIA spot that hasn't bought it already with all of the news that has come out about AI? Who's coming to buy NVIDIA right now thinking, oh, I really need to get this exposure to the AI boom? Like everyone who wants NVIDIA has got it, in my opinion. I actually don't have any, but that's my view. Yet the S&P is at all-time highs, and you've got an administration that are, I think, trying to rebalance things a little bit. And so I just kind of like the risk reward. I like the risk reward of going short. And if I lose and I get liquidated as the S&P surges past 7K again, no problem. But that's my thinking. Curious for your thoughts. Ledge, coming to you first. What do you think of this line of thinking and shorting when you see the CEO of a company branching a sword around? What do you think about that?
Yeah, it's in line with your other theory, which was crypto related, and saying whenever a stupid thing happens, you're taking profits or selling, and maybe this is a good indicator to combine that with. Also mental myself to not bring swords to the show, because I do have a little sword collection, so we're not going
okay.
nerd with swords on the screen. But
didn't know about the sword collection. All right.
But I do, in all seriousness, agree with your take there.
Okay. Brad, you're gonna short with me? Do you believe me enough? Do you trust my judgment enough? You're gonna get back into the perp trenches?
Nah, dog. I'm on building arc. I'm so tapped out and spot everywhere.
Does that make sense? Did my call back to my 4.5K ETH short not get you going a little bit there? No, absolutely not. Just in the building up.
No, because I don't have NVIDIA. You don't have NVIDIA. So like the next person would be retail. So I was thinking about that. I was like, yeah, like professional entities, most of them are probably pretty freaking allocated, right? Like they've been mortgaging their houses to buy this stuff for the last year, 2 years, whatever. But like retail is skeptical, just as they were skeptical of Tesla whenever it was face ripping way back in the day above what it was actually earning, and then it continued to rip for the next few years. And I don't like to wade into the macro stuff. So like that's something that I hone my scope into crypto and the AI world. So like it's hard for me to extend into that stuff. So I don't know, all anecdotal stuff. I honestly don't have enough to formulate an opinion on it, but
Fair enough.
Yeah.
I very much like layering in the macro. That's what I feel like I'm getting good at over time, obviously, and just learning that stuff, trying to layer in the politics, trying to layer in what else is going on in the world. By no means being an expert in any of it, but just kind of getting a sense and a feel. Funky, talking of layering in the macro, the politics, bringing in our political correspondent from the US. What is your take here, my man? What are your thinking? What's your thinking on the general, maybe the stock market in particular?
Great conversation overall, and I gotta say, I do own Nvidia. I've had it for many years, so and that's why I was laughing because I thought you said you were gonna start buying Nvidia, and you didn't hold to that. Yeah, I think you're spot on, right? There's many people who've been calling for this being a top. If you look at the sort of structure that happened prior to the tariff stuff back last April, it's kind of this rounded hunchback, and saying we're probably due for a major correction in equities. But I think that could happen, this spring. And then, of course, you get Warsh come in as the new Fed chair and then try and, unleash the wave of money and all the things that you're talking about in terms of, have some sort of stimulus, get people happy, go to the polls, vote for Trump, whatever. I mean, we'll see if it plays out. I think it's going to be very difficult to weave through all of that. And the thing about the shorting stuff, just what I've been doing is just doing small trades on markets, which is the Kinetic HIP3 front end, because it
Good.
just
I
helps
like that
that.
idea as well.
And yesterday I did something that I say I normally never do, because I had said to you that what you should do for shorts is just keep moving your stop loss up. So if it does bounce back, you at least lock in your profits. Well, I stupidly shorted Apple yesterday and I set a take profit limit to just get out of the trade. And I was like, no, I mean, it was fine. I still won and got some money, but it was like, I should have just left it open and done my typical strategy of just moving the stop loss, but I didn't do it. But it's been fun. And I think you're right that we're due for a correction at this point.
Yeah. By the way, I appreciate the additional context, Funky. My thinking is, of course, that we go down, but my additional thinking maybe on that is like, even if I'm wrong, I like the risk reward. And I think that's the crucial part that I'm learning more. When I went back and looked at the ETH short video that I was on the show, I can't remember how many months ago now. I think that was the key part of it for me. It was the risk reward at that specific time felt better than before. And so but it's kind of nuanced here because the S&P is still really high. So maybe the risk reward there is great, but you've got Palantir down almost 40%. So how much further does that one go? Because some of these have really unwound already. If you look at Netflix as well, as it's unwound a lot. You said Apple just moved down 5% yesterday. So, it's a dicey game, but again, thinking through risk reward, I feel like I kind of like it. But that's the thinking. That is the thinking at the moment, and we'll see how it goes. We'll keep an eye on it. We'll keep bringing those thoughts to you. Ledge, actually, no, we're going to bread here for the second headline. This is an interesting one. Crypto native lending platform, biggest one around. Aave has been in a bit of a battle with the DAO for some time about revenue, who controls revenue, which revenue gets directed to the company, what goes to the DAO. What do we need to know here in terms of the headline?
Yeah, there's been a lot of Aave discussion in the last 6 months. So reminder for the audience who do not understand what Aave is. Aave is, as BCheque said, the largest lending protocol in the industry. So for relative numbers, they have $27 billion of TVL. The next biggest is 5 billion. That's Morpho, and then 3 billion just lend. So orders of magnitude, it's a 5x the next biggest protocol. And then a reminder of Aave specifically, the construction of the team and the DAO and everything else is there's Aave protocol, which is governed by the DAO. That is Mark Zeller. That is the underlying smart contract infrastructure. And then there's Aave Labs, or there's a couple different entities that are involved in it that manages the products of Aave. That is aave.com. That is this Twitter account. That is the website, or not the website. There's a few other things like this, the swapping and shit. So there's two entities that were making money on Aave's brand, right? One is a protocol, one is this. And it was going in two separate ways. This kind of goes into the foundation versus token discussions, equity versus token discussions that have happened in the last few years. So Aave, the protocol, this is again, Stanny, the original founder, and the people building the products, came with a proposal that said, hey, we are now going to give 100% of Aave product generated revenues to the DAO. And this was seen as a way to align token incentives between the two people. Now, on the surface, it looked really good. People were excited. They're like, hey, cool, route everything. Everything's going to the token. Token can pump. I actually didn't check the token price on this, but I imagine it had some kind of reaction that we could probably gauge. But so good on the surface. Then Mark Zeller, the leader of the DAO, came through and said, well, yes, it is cute. It says 100% goes to us. That sounds great. But if you read the fine print, there's actually some details here that doesn't make it such a clear win. One is, what does the 100% actually truly represent? Because if you read the fine print, it carves out several things like doing incentives campaigns and maybe even some like different payments. There's just like a lot of carve outs for things that potentially exclude the money going to the DAO. So they said, okay, we need to have control over what this 100% actually defines so that we can protect ourselves in the future. So Aave Labs can't just go, oh, well, actually, this entire front end is now incentives, and therefore now it all goes to us. So one, they're doing that. And then two, there's actually an exchange. It's not just, oh, we're doing this out of the goodness of our hearts to fund product development. We actually need money. So they said, we'll give you all of this stuff, this future revenue, but in exchange, you have to give us stable coins, roughly, I think it was like 25 million, which is a lot, obviously. And then 75,000 Aave tokens. So that is seen as an exchange in both voting power and future purchasing power, right? So Aave, the DAO, which is governed by the tokens, would be losing its purchasing or its voting power on its own protocol, but then it would also be losing, obviously, the token, and trying to understand where that's going to, what's going to happen. So, and I think Mark gave some numbers in this blog. I think it was something like, it ended up being like 20 to 30% of all their stables. And it's like, it was actually a sizable portion of their actual DAO fund. I think it's up to like 140 million at this point. So not a clear-cut thing, but very directionally correct and very directionally exciting for them. They're going to continue discussions. I think broadly, this is just another data point in the trend of consolidating token versus equity businesses under a single unified thing, or attempting to, which is the Aave token here. It is good for our industry. We want to continue to see this kind of stuff, but unfortunately, legacy systems are going to have some messy stuff to work through to reunite all of this.
Really, really helpful summary. I think it's really, really interesting here, this debate that between the company and the DAO. I do think people need to be honest with each other on both sides and say, well, what is the optimum amount for the company to own of the DAO? There has to be a number. It can't be the DAO wants everything. You guys at the company go and do all this work, give us all the revenue, and like you're not appropriately incentivized. Equally, the DAO has been there for a long time. It was sold as this way to participate in the upside, and you can't just make them go away entirely. You know, say Aave makes all this money, 100% goes to the DAO. Sure, they do need some of that back in order to fund product development. I think maybe some views are a bit extreme here. The truth is going to have to be in the middle. Like, there's going to have to be a number that you realize is appropriate to go back to the team who are building to keep, you know, Aave's trying to compete on the highest level to become the app where people will put their dollars and compete with everyone in the whole world. That's a big task to undertake. It's already achieved that position within crypto. And now I guess they want to go bigger with this app, right? So I'm sure that is going to cost a lot. So I haven't run the numbers. I'm just saying there's got to be a middle ground here. Maybe 25 million is too much. I haven't kind of looked at it specifically.
You say app. Have you seen the mobile app that they built?
Well, I've signed up for the waitlist.
I think,
yeah, I'm not in, but I've signed up for the waitlist. I think our region is not included, but it looked great from the outside. Are you in it? Are you using it, or have you experimented?
Not in it, but I've watched people demo it and show what's actually in it. It's actually like a really abstracted, really nice proposition for everyday person, right? Like they're like, as you said, they're trying to be competitive globally, right? Not just within crypto, and that's a huge ask. You're going against juggernauts.
Yeah, I mean, Aave's already known, like if the goal was just to maintain its current position and just do smart contracts for every single chain that ever launches, fine. Yeah, sure, they can do that, but that's not the goal. And maybe they don't need to spend any money if they just keep the money printer on in their current business format, but they're going for something bigger. So, yeah, I maybe I'm kind of anti-DAO sometimes, knowing how the politics works, and I'm kind of pro let the people in the companies do the things they need to do. I don't know if 25 mil is the right number. Maybe it's too much, but I'm very pro. Give the leadership to the person who's in charge and let the person do the things they need to do to make it great. Ledge, if you have a view there, let us know now. Otherwise, I'm going to go into this wealth tax thing. Then we need to do our Yeat $500 giveaway as well. So speak now or don't.
I shall speak. We'll keep it short because
Okay.
we are a bit over time. I am actually, some might sound a bit contrarian. I'm actually very thankful for this conflict that we see between Labs and DAO, because it is super insightful into the different incentives, into like a conflict. If that were to happen in a traditional company, you would not see that on the outside. And obviously, because this is a DAO, this is crypto, this is decentralized, more of that is public. And I just find it super fascinating to look at it. Don't have the right opinion. I don't have the right answer as to like what is the proportion, what is the amount of money that should flow back to the team. But just observing this, and it's this extension of that conflict we've been reporting the fourth or fifth time on the show, is just fascinating and very, very educational. So that I'm thankful for.
Okay. Final headline before we get into the Yeat giveaway to end the week with the $500 giveaway to someone who's been participating on our referral link. I'd like to end the week with our partner Yeat. But this final thing that I think is important to know that is taking place in Europe. This is the news that the Dutch Parliament have passed legislation to facilitate a 36% unrealized capital gains tax, which was just passed by the House of Representatives. The reason why this is so controversial is obviously on the unrealized aspect of the capital. Usually you are taxed on either income, you make a certain amount of money and you give a proportion of that to the government, or you make certain money on gains. So you invest $10,000 in a company, or you start a company and your company is worth something. And then when you sell that equity and you realize those gains, you have an amount of dollars in your hand, and then you take a proportion of that and you give it to the government. That's would be a tax on capital gains. Unrealized capital gains tax would be you have started a company, it is worth a certain amount of money, it goes up in value, and then the delta between what it was worth when you started and what it is now worth 1 or 2 or 3 years later or whatever is the amount which you need to now owe taxes on. So whether or not you have the money in your pocket or not, you now owe taxes on it. And the only way you're going to be able to fund that, because you don't have the money in your pocket, is to sell shares. So you're going to have to sell shares in a company that you've just started or that is new in order to fund the gain that you have allegedly made, which, by the way, the whole point of it being unrealized is that the valuation of these companies are kind of up in the air when you start a company, right? A new company can be super valuable at one point when it's private, and then it could fail the year after because it's, it hasn't worked out, competition's come in, founders don't operate at the same level as they did at the beginning, or whatever is the case. So I think this is what has got people so upset. They think this is a grave U-turn from capitalism, I guess, where it's kind of attacking money that you haven't even made yet. And I think the reason why it's maybe relevant across the world is, fine, this might be happening in Europe in some capacity. It's also being discussed in California at the moment. There's been a big exodus from the Californian state. Mark Zuckerberg just was announced to move to Florida. David Sachs, cryptos and AI czar, has just moved from California to Texas. And there's a increasing exodus from California to either Florida or Texas because of the threat of an unrealized capital gains tax. It's happening also in Europe. There's clearly a trend now with someone like Mamdani in charge of New York, where these more populist policies are becoming more popular. So I think it's something to be wary of. I think if you have equity that is valuable, or even if it's just volatile and you think it might be valuable and then it might not be valuable, you don't want to get stuck with people chasing you for money that you don't even have and you haven't even realized. And just to give some commentary around the space, we had Toby, the CEO of Shopify, said, this is the dumbest thing any government on planet Earth is pursuing right now. And that's saying something. It's been kind of universally denounced as ridiculous. Toly from Solana said, this is even incredibly dumb to do in wartime. This is literally destroying the means of production. They'll basically have to add capital controls. Dutch business owners would have to sell a part of their equity to someone and tell that investor that they are not using the raised proceeds to grow the business, but instead to pay the tax. Just think of that, even from the investor perspective. You put your money into a company and then the founder is having to exit in some way, not to sell equity to make the business better, but just to pay this imaginary, pay a very real tax on an imaginary gain that hasn't even been realized. So this is very, very anti-entrepreneurial, a real problem, I think, if this continues to spread worldwide. And we're just going to see the continued migration actually out of Europe from people who are slightly ambitious, slightly harder working, want to try to be successful. This is going to be bad. This is going to be bad, in my opinion. Curious for your thoughts, guys, before we close out and hit our Yeat giveaway to close the week.
Right. Go first if you want.
No, it's absolutely insane. Yeah, of course. Like, I don't know. There's not much to like what he just demonstrated there with that comment exemplifies it the best. Like, yeah, why? Like, how could you possibly be expected to pay unrealized gains? Like, man, it cuts into all capitalistic endeavors anyone could ever do. It's insane.
Yeah, very much agree with that. And even the argumentation behind that is insane. The parties who voted in favor of that said it's not the preferred approach, but they're backing this proposal because the previous system had been struck down by the Dutch Supreme Court. And they're like, oh, now we don't have other option. Sorry, we have to do this. We have to ruin the entire entrepreneurial spirit of a country just because we are not smart enough to think of something better. And it's incredibly stupid. There's nothing else to say on that.
I'll say one thing, which I think is really important. I know we've run a little bit over. We want to get to our giveaway so someone gets that $500 in their hand. I think the reason why this does happen is because a lot of wealthy people who own equity never have to realize their gains because they then borrow against it. I think that is a genuine issue. And I heard someone else smart who said that, I can't remember who it was. That's the real issue. The real issue is that people can just keep compounding their gains. If they own equity in something and it's valued at a certain amount, they can borrow against it, and they don't pay tax on that borrowing. They can make more money on it, and then they'll just pay, the gains there. But the smart way to attack this would be to say, okay, if you borrow against your gains, against your unrealized gains, we're going to do something there. Like, rather than you being able to borrow completely for free and you not needing to realize anything and you paying nothing, when you borrow, because that I think maybe is a little bit unfair, that these people with a huge amount of equity, unrealized, get to borrow for free, kind of realize their gains via the loan, even though it's not fully realized, and then get to spend that without consequence. So I think something could be done there, but this is attacking the wrong angle. So you've got to attack it at the right angle rather than this one, which is basically insane. So that would be my final thought. Let's get into the Yeat giveaway ledge to close the week.
Let's do exactly that and take a look at the Modern Market community leaderboard, where we have seen $69,000 in volume from 77 players. And this week, Funky is not in the top spot. It is Dudify with almost 30K in volume. Funky doing the usual 25K. Phonics coming in at in the third place with almost 12K in volume. We did our usual weighting depending on the volume wagered to come up with the wheel of names to see who is gonna win the $500 this week. So let's spin the wheel and let's find out who is the winner in this down market. This is looking like Funky. It's gonna be Funky. Yes, it is Funky. Congrats on the BCheque, help me, third win, I think.
Might be more now. The partnership's going a long time. Funky's been up there for quite a few times. We're definitely into the realm of repeat winners here. Got to stay in the game. Got to stay in the game. Funky's always in the game. Just missed Phonics, actually. Phonics has had a win or two as well. He's always staying in the game. But congrats to Funky. We'll get that sorted for you in short order. Just a reminder, our partners at Yeat, you can participate in our weekly giveaway if you sign up with the affiliate link in the comments. Do remember to participate responsibly. We will do another giveaway next week. Looking forward to it. Thanks so much for joining us today. We hope you enjoyed the show. We hope you enjoyed the week of shows. We'll keep trying to follow the various markets that we are expanding into as the modern market gets more complicated and volatile and the world goes a little bit crazy, to be completely honest. But we'll be back next week, same time, same place, Monday. We hope you have a wonderful day. Thanks to my co-host, Legendary and Bread. We will see you next week. Have a wonderful day. Take care. Bye-bye.